Welcome to No Free Lunch, Africa's freshest business and tech podcast with me, your host, Greg Stewart. Our conversation today is how to provide smart mobile phone access to African markets. And with me in studio today to discuss this is Shaun Durandt, Head of Business Development at PayJoy. Based in Johannesburg, Shaun has over 2 decades in telecommunications leadership with senior roles focused on sales, marketing, distribution and operations. Welcome to No Free Lunch, Shaun.
Thanks so much, Greg. Really enjoying having an opportunity to be with you. Thank you.
Well, I think this is quite an interesting discussion, actually. Mobile communications has become, certainly in the African continent, is the predominant form of communications. And PayJoy is actually a San Francisco-based public benefit corporation, which I found quite interesting. It was started by Doug Rickett, if I'm correct, and provides smartphone financing and credit to underserved consumers in emerging markets. And now that's a very interesting business model for a public benefit corporation, which is a non-profit, essentially, in South African terms. Chat to us a bit about your journey. You've been in other telecommunications companies. What brought you to PayJoy?
Yeah, that's a great question. And I often reflect on this. I've had a lot of experience predominantly in the operator space in South Africa, specifically with MTN. I was there for 10 years. And that was in the early days of mobile telecoms. As you'd recall, Vodacom launched in 94. They were first to market from an operator network perspective. And 6 months later, MTN then launched. And the rest is history. We've got other incumbents in Cell C and Telkom and all that good stuff. So my time at MTN, I think, was probably best positioned being ultimately, with the benefit of hindsight now, being in PayJoy, probably best positioned be in terms of being able to add the maximum benefit and value I possibly could within PayJoy. I got a really good sense of market dynamics, consumer demand, what was important, what wasn't important to consumers, particularly from a communications perspective. And we were all newbies at that stage as consumers and people operating in that space. It was this new technology that was completely amazing. There were no cords attached. It was just completely bizarre. It's just stuff out of Star Trek, I guess. If you grew up in the 70s and 80s, you'd recall that. And that came to fruition. And I was able to cut my teeth quite deeply into the operational aspect of networks, sales and marketing, which was fantastic. That was really on the front end and understanding human behavior, what the demands were like, what the channel expectations were like, and all that good stuff. And then I moved very quickly over from that 10-year period into the OEM space, predominantly with BlackBerry, 5 years of which I spent there, a significant part in South Africa specifically, and then my scope expanded into the rest of Africa, sub-Saharan Africa specifically.
Now, BlackBerry, there's a name and a brand we don't really even hear anymore. It's bizarre.
It's crazy.
I think it was one of my best mobile phones going back at that particular time. I can't remember. I think it was the BlackBerry 8610 or something like that. That was
100%, and that changed the landscape. Yeah, that was really the first mass introduced smartphone. And if you remember, the chat feature on BBM Messenger, BlackBerry Messenger, which was native on that device, and that became what we know as WhatsApp currently, and all the other platforms that have sort of come into the market. So that was a really cool space to be in, because that then shifted things significantly, really, from feature phone, which was really the dumb phone space, make and receive calls, send and receive SMSs, to now having a real engagement with internet and on scale. Yes. So that was really cool. I then spent a lot of time with what we originally knew as Nokia in those days, and there was a transition from Nokia into Microsoft when Microsoft bought the mobile devices business from Nokia. So I was Nokia and then airlifted into Microsoft, same role responsibility, same structure, just driving the mobile strategy within the Microsoft space. That was just over 2 years. And then more recently, HMD Global, who then, it was a bunch of private investors that were attracted by ex-Nokia execs from the good old days. They then bought that business back from Microsoft and became HMD Global, and were known as the home of Nokia phones, which they still they're currently operating. And then I transitioned into PayJoy, and the timing couldn't have been better, because I had all this mobile telecoms context, both from a network perspective and what the network landscape looked like, both retail, corporate, et cetera, the retail partnerships, all that good stuff, into OEM, to understand how that engagement works, how you plan roadmaps, what's important, what isn't, how the pricing works, what the sweet spots are, all that good stuff. But you get to a stage in that space where you need a change. It's the same old, it becomes the same old. It's kind of rinse, repeat. And you start swimming in the same pond, over a decade or two. And this PayJoy opportunity, firstly, it resonated for me. It's the most surreal thing. It had almost had a social responsibility element to it, where
Yes.
I can really make an impact here and make a change, because I was able to identify and relate to what the purpose was. And that's Doug's, you mentioned Doug earlier in terms of him being the founder. Yeah, he spent a lot of time in West Africa, a long time in
Okay.
West Africa, with adopted parents, West Africa family, within a village. So he lived, ate, slept, what it was like to be in Africa and to have and not to have. And something that landed really, really strongly with him was this demand and reliance and benefit in having communication for, the people of Africa, not just Africa, a lot of other emerging markets as well, as you alluded to. And that device has now become a commodity. A mobile device right now, smartphone specifically, is going to be, for the most part, the first experience and possibly the only experience people have in engaging and connecting to the internet, having access to information, having access to communication through social media, through, research for school, for projects, for, how do I start up a business? How do I?
Part
So
of the
that access
business,
has become
buying,
really, really
selling.
critical.
Yeah. Sean, I'm going to
Absolutely.
interrupt you there. We could probably have a broader discussion about the environment, but I want to say, for me, there's two things that are problematic. The number of people with smartphones in Africa compared to the rest of the world is still small. The last figure I heard, it's around about 40 to 50% of consumers who have mobile phones in Africa are smartphones or
It's
have
about right,
smartphone
yeah.
access. I might not be 100% accurate with that figure, but it's around about there. And so that means there's a huge chunk of that market. You spoke about rural villages, and there's a large chunk of that market that just doesn't have access to these kind of communication opportunities. There's two things,
Yeah.
obviously, the networks themselves, and that's gradually been addressed by things like Starlink and other sort of satellite connectivity that's starting to come into the market. Putting up infrastructure in those areas has obviously become too much of a challenge for a lot of those regions in Africa. It's just too difficult. But the other thing is access to phones. It's a simple thing. How do you get access to phone, and how do you get access to a smartphone? So I want to talk a bit about how PayJoy is doing this. It's a public benefit company, so obviously it's something that's not seeking to make a profit necessarily, which is unusual. And then how is that structured? How did PayJoy come about this? How was this whole system developed, and what does that look like to
Yeah.
answer those things? The one side of it is being answered by the big telecommunications company that are slowly bringing in the connectivity opportunities. But the other one, definitely the mobile phones. How's PayJoy answering that need?
Yeah. So first up, the technology availability is absolutely there. So from a production perspective, through all the OEMs, they are producing entry to mid, smart devices that are available and on scale, because that's really the total addressable market. The size of the total addressable market sits in that sort of mid to low end space in terms of smart devices. What people forget, and maybe don't even know, is that $240 billion through mobile tech was pumped into Africa last year. So there's a significant element of tech coming into Africa. Our position from a PayJoy perspective is access to that technology. And the barriers to market are predominantly costs still. So we talk about entry smart, we talk about mid-tier. There's still a barrier to that through the cost element. How do we make that more affordable, and by association make it more accessible? And our model is very, very simple. We have a rental model of a device that you qualify for, and the qualification criteria, and if I can pull it back to South Africa, because that's really where we're operating in for now in Africa, is we have very strong ties with TransUnion. So our back end plugs into TransUnion. It's a very high level vet, and please, it's not the vet that you and I would go through to take out a personal loan, car finance, a bond, where you've got to give your entire history, proof of residency, pay slips, proof of employment, all that. But none of that. It's really a very, very high level risk assessment of who it is we're dealing with, because predominantly you have these folk that want this access aren't unemployed. Yeah, they've got side hustles. They're generating income. It's just not in a formal manner. They're not banked. North of 50% of the South African population, for the most part, is either unbanked or underbanked. So there's no record of them. There's no footprint. So that makes it very, very difficult in the formal credit vetting criteria. We want to take that away because, if we take that away, we bear the risk through a 3, 6, or 9 month rental period in small bite-sized chunks. So it's a nominal first payment, call it a deposit if you like, and then 3, 6, or 9 months of rental. And at the end of that term, ownership then transfers to that customer. That makes the affordability, it's a game changer in terms of affordability. It now opens up a part of the market, a significant part of the market that previously couldn't partake. And we've got two mantras within our space. It's access. So that's really, really important. That's the starting point. And then it's inclusiveness in the general gigger economy. How do we help these people develop a credit record that down the line allows them to go into a bank and say, I'd like to borrow 10,000 Rand to start up a little business. I would like to take out car finance for my first car. They now have, through TransUnion, through us, and the record that a really good paying customer has, they've developed in a little way a credit record, which is massive. All of a sudden, that inclusivity door opens up, enormously. And that's fundamentally what the model is about. We take all the risk. So whoever it is that we approve and sign up for a rental period of either 3, 6, or 9 months, and generally the value of that device is around the 2.5. ASP is around the 2.5 to 3,000 Rand mark, and that is more than sufficient, in terms of a requirement on a smart device to be able to do what it is you need to do on a daily basis and do it functionally.
And these are all new phones, Shaun. It's not.
Yes.
They're all new phones, so it comes with warranties and is there insurance
100%.
built into that process?
We bear that insurance. Remember that hardware actually belongs technically, and people don't really get it, but you've got to keep reminding them, it's actually ours. That device belongs to PayJoy until the ownership transfer happens after whatever the period of rental is that they've taken, is 3, 6, or 9 months. So we've got really, really great relationships with all the OEMs. So whatever OEMs pass on as warranty, whatever their warranty criteria are, we fulfill that in the face of the customer that we engage with.
And in terms of this, PayJoy calls it responsible lending process. Is there interest charged on that amount?
No interest. It's just an amortized cost over either 3, 6, or 9 months. And again, and you mentioned responsible lending, that is critical. And where the benefit is, Greg, is if we don't apply responsible lending in terms of our model and the way that we model a loan or rental period for a customer, if we don't do it responsibly, it exposes us too, because remember, we take 100% of that risk. If there's default, if there's late payment, if there's all that good stuff, there's no penalties as far as PayJoy is concerned. And if there's a bad debt element, we absorb that. There's no onus on on the customer whatsoever. So we have to, as at the very least on our back end, make sure that responsibility starts with us, because it ultimately falls on us, regardless of what that customer behavior, payment behavior looks like down the line.
That's quite amazing. So I'm assuming that PayJoy has set up quite a significant fund that allows for that sort of loan period. But the nice thing about it is that it keeps repeating. So as people pay off their devices, you have money back in the fund to allow for more. Is it limited to the number of people you can actually give loans to, and how many people have actually taken up the offer?
We trade regardless. So the period is however long it takes. So that's our business model. It's baked into our business model. And in South Africa, we are fast approaching 2 million customers. And what the really cool thing is here, and I think it's good context for your viewers to take on board, is that from a pure customer retention loyalty perspective, it's very much the approach that an operator would take, an MTN, a Vodacom, a Cell C. I'm sure you've had many contracts with either an MTN, Vodacom, or Cell C, and they've been at stages an upgrade cycle. Hey, Mr. Greg, you're due for an upgrade. We want to retain you. Here's an offer to sign for another 24 months or 36 months. We're now getting close to 48 months, as you know, within the operator space. And that's the benefit of us too. We build this really loyal customer base that exponentially grows, but we then look in the rearview mirror and start retaining. Look back to the first guys, the second batch of guys, the third year of guys, 5 year of guys that have gone through various iterations of a rental period, 3, 6, or 9 months. How do we get them back? Hey, you could be due for an upgrade. Maybe your kid needs your phone and you'd now, like to upgrade. Yeah, it's very, very similar approach to what the operators do here in South Africa. So that's really exciting. And it's going to be a focus for us, in the next 12 to 18 months.
And tell me, from a distribution point of view, how do you get your initial market? Do you work through the normal outlets, or how does that operate? Have you got your own standalone teams that promote it, or how does that work?
A great question. So as you know, South Africa is very unique from a global market perspective. We're very structured in terms of formal retail. We've got a market that is very much led by operators, unlike other markets. The MTNs, the Vodacoms, the Cell Cs, they essentially spearhead the market in terms of driving what it is that's ranged, where it's ranged. Then downstream, you've got a very strong retail presence. I talk about TFG. I talk about retailability in Edgar's. I talk about Mr. Price and their trading companies. They've got a significant and very, very formal and structured footprint in South Africa. We leverage very, very heavily on that second tier, which is the retail partnerships, the TFGs, the Mr. Prices, the Edgars, et cetera, and the branded retail space, the MTN branded stores, the Vodacom branded stores, Cell C branded stores. And we have representation in select outlets in those channels. And when I say select, it's not 5 or 6 or 7, it's a couple of hundred, if not 1,000, but not all, because if you look at their total presence and footprint, it's not necessarily viable to have representation in every single store. It just doesn't make, geography doesn't make sense, the catchment doesn't make sense. But the short answer is we've got amazingly strong retail partnerships, and we leverage heavily off them from a device procurement perspective. That's one. And then just having the footprint and presence through the outlets that you have. So that's one element. That's traditional retail, very significant presence there. And then we've got a really, really cool division within the business, started middle of last year. We have PayJoy kiosks, branded, proprietary, PayJoy owned end-to-end, our own promoters. And we are sitting on 327 of those around, 327 around the country. And those are great. We're continually expanding those where it makes sense, whether it's in a strip mall, whether it's in a township, whether it's wherever. So that's really cool, because it's really given us the opportunity to create our own identity and full ownership of what PayJoy is about. So that element and the traditional retail space that we leverage on heavily too just makes for a perfect synergy in South Africa.
And then in terms of expansion and growth, is PayJoy currently operating beyond South Africa? And if not, are you looking to grow into other markets in Africa?
Absolutely. Yeah, absolutely. I can't share too much in terms of where, but expansion into the rest of Africa is 100% on the cards and a priority for us. And there are key markets that we've identified in terms of in the short term going into first. But having said that, Greg, there's still so much work to be done in South Africa. People underestimate, the kind of legwork, resourcing, education, just general work that still can be done in South Africa. So that is still our focus, in the short to medium term. Still, as I say, there's still so much to do. But African expansion, rest of Africa is definitely on the cards. It has to be.
Yeah, I think your biggest challenge outside of South Africa is definitely going to be distribution. Are you perhaps looking at creating an online store or online portal where people can just buy online? Because that seems to be the logical next step. And then obviously using various distribution channels to get the actual goods out to them.
It's a great observation. But one thing I have to call out, and quite logically too, if you compare developed markets and you compare that to developing markets, the adoption, the sense of comfort, the trust in online is not in South Africa and Africa more broadly, as you know, is not being adopted as quickly and is not at a level where developed markets are. So that creates a little bit of a challenge, because it takes the tail in developing that comfort and developing that familiarity and all that good stuff. That takes time. So you don't want to put the cart in front of the horse, if I were to put it that way, where we can still make a massive impact in the traditional approach that is really, really synonymous with the African consumer, the African mindset. Let's do that. And as that comfort level builds over time in various aspects, not just from a PayJoy, just generally from an online perspective, people start getting more comfortable, then we can slowly start introducing that online element. Having said that, though, South Africa is a little bit different. I think we're a little bit further ahead in terms of what I've just sort of identified, and we are dipping our toes into the online element, whether it's through retail partnerships and leveraging off their infrastructure, or our direct to consumer stuff, which primarily starts in an online space. We're definitely dipping the toes in there for sure.
And I think obviously with your existing partnerships, where you've got great partnerships with existing retail chains that are already in places like Zimbabwe and Botswana and the other Southern African regions, that's probably also a great channel to look for growth in the broader African market.
100%. Yeah, there are a couple of countries in SADC where literally just across the border, you've got a very similar footprint in a TFG. They've got representation, in countries just out of the South African borders. Mr. Price, another great example, just outside the South African borders. So when we do take that step to expand outside of South Africa, it's almost a little mini blueprint. What it is we're doing in South Africa, we literally airlift and then drop into those entities in Southern Africa. Trading conditions and trading criteria, all the regulations and that sort of stuff, there's obviously different boxes we would potentially have to tick. But the opportunity in blueprinting what we're doing here, just outside of South Africa and the SADC countries, is a real one.
Yeah. Well, I tell you, it's researchers again and again shown that the minute you start opening up, smartphone, mobile communications into regions, it assists with so much. It lifts the opportunity to start businesses, to grow businesses, to receive payments, for education, for healthcare even. A lot of digital healthcare coming online where it's difficult to get hold of a doctor, when you're sitting in a rural area in some, village. But doctors available to you via your smartphone, and with all this AI technology coming on board, the difference that kind of communication availability makes is actually quite astounding. So definitely what PayJoy is helping facilitate is acceleration of that process and access to African markets. And I just want to say that that's such a great place to be in, and I hope that PayJoy continues its journey, and that you continue to develop and reach a big chunk of the African market.
You summed that up perfectly, and I've actually got goosebumps to you, because that's exactly what we live every single day. And I'm so glad you have an appreciation for that, because that's what we live every day. Doug reminds us so often, we're doing such good community, social responsibility work in these efforts. We need to recognize that and remind ourselves of that all the time. And we see the testimonials. We've got testimonial videos that we share internally of these people with real life experiences, starting up a business, the health aspect, the access to aspect, the building of a credit record aspect, all that good stuff. And it's amazing to see firsthand the impact that we're having on people's lives, which is so rewarding.
Well, we focus very much at Business Tech Africa. We are focused on that whole startup entrepreneurship, small business, markets in Africa, across Africa. And it's amazing to see what's happening. But, youngsters today, with AI again, basic things like coding, learning coding, and being able to start a business, create a video game, create wealth for yourself that you would never have been able to create. We see this on an ongoing basis. We talk to these founders. We know the impact that these things have. And so for us, this is important, and definitely what PayJoy is doing and what your operations are involved in is important. So long may it live.
I appreciate that. And what tested that flex, Greg, we all remember it so clearly. For me, I wasn't at PayJoy at the time, but if you think about the COVID period where there was lockdowns and kids were dropped in the deep end without any tech, they had Google Classroom, they had online learning. That's where you really got a sense of, in a small way, got a really good sense of the dependency on technology. And when it gets taken away in that taken for granted space in a classroom or in a lecture hall at Vast, that goes, you now all of a sudden have to fall back onto something. And that's where I really saw Jeepers, the smartphone revolution and the smartphone accessibility is even more important now than it ever will be. And I must just add, and it's a more broader observation, I think you'll appreciate this which further compounds the argument and the value in PayJoy, what PayJoy brings in terms of accessing through, limiting the cost and all that good stuff. We've got a massive issue globally where, and I'm sure you know this, the memory price across the world, the cost of memory has gone through the roof. And that's really in lieu of the shift to AI and the requirements for memory in AI. It's driven up all the bread and butter memory stuff that we need to develop mobile smart devices. It's driven that exponentially. So we're seeing a massive increase. We have for the last 4 or 5 months, a massive increase in retail pricing. So the whole market shifted. What was entry at $8.99, $9.99, $1,000 entry smart device up to the 2.5 has now gone up by 15, 20, 30%. So that then further fuels the need for PayJoy to be there just to make that accessibility a little bit more palatable. So we've got some challenges. They say that dust is only going to settle. It won't settle before the end of 2026. We'll start seeing a recovery in 2027. But it's a problem now.
Yeah. It's, there are so many challenges, but it is great to see that there are these kind of solutions being available. And at some point in time, maybe we can accommodate a conversation with Doug as well. And love to have him on the show. And I think that's a very interesting perspective on life and on where things are going. And I want to thank you, Shaun, for joining us on No Free Lunch. We're almost out of time here, and but it's been great having you on the show. And I wish you and PayJoy everything of the best.
Thanks so much, Greg. Appreciate the kind words, and thanks so much for the opportunity. Really enjoyed this.